It's time now for a look at the top business stories, and France 24's Cole Stangler joins me in the studio for that. Hello there.
Hey, Charlie.
You're starting with a big deal in Washington over a new infrastructure package. Tell us more.
Yeah, that's right. An agreement between senators from both parties, a pretty rare occasion in the U.S. these days. Now backed by the White House, the deal would see Congress move forward on a $1.2 trillion infrastructure bill. It's much smaller than the plan initially proposed by President Joe Biden, but is designed to win support from Republicans. Instead of tax hikes, new spending will be paid for in part by beefing up tax enforcement, while unused coronavirus aid funds and economic growth will provide other key sources of revenue.
The investments we'll be making as a result of this deal are long overdue. They'll put Americans to work in good-paying jobs, repairing our roads and our bridges. They'll deliver high-speed internet to every American home, bringing down the price that people pay now for internet service. And they'll close the American digital divide, as been driven home by every mother and father with a child at home during the COVID crisis.
So let's walk through the nitty-gritty details of this plan. What exactly would this $1.2 trillion be going towards?
Yeah, so some of it would go to programs that are already in place, but just half of that will cover new investments, much of them in transportation. It includes over $100 billion on roads and bridges. You can see there's $66 billion on rail, $49 on public transit, while broadband internet and the power grid would also see major boosts in federal spending. But the bill's passage could prove tricky. It needs 60 votes in the Senate, meaning at least some support from Republicans. Democratic leaders have said they'll support it as long as they can approve an additional plan focused on what they're calling human infrastructure, that's healthcare and education. They're hoping to approve that bill through a simple majority vote.
So, uncertain whether this bill is actually going to go anywhere, but investors and the markets seem pretty happy about it. How are the markets reacting?
The general sense is really this is going to help extend the recovery that we've been seeing in the world's largest economy. And we saw earlier in the day gains on the major Asian indexes to close out the week. European indexes, though, with a bit of a more subdued response as we're seeing their shares on the FTSE up around 0.1%. The DAX in Frankfurt just under the flat line. Shares for Adidas, though, up around 5% in Frankfurt. That's after rival Nike reported better than expected earnings. The CAC 40, as you can see, down a bit too. That's as new data is showing a slight uptick in French public debt.
So there's been a shakeup at Toshiba. Shareholders voted to oust the company's chairman.
Yeah,
What's going on?
A big defeat for management at the nuclear and electronics giant. After a 3-hour meeting, shareholders from Tokyo voted not to reappoint Chairman Osamu Nakayama, also rejecting another member of the board of directors. Investor revolt comes after an investigation found that Toshiba officials colluded with the Japanese government to reduce the influence of foreign investors at last year's shareholder meeting. Toshiba is one of Japan's most historically successful brands, though it struggled from scandals in more recent years.
Next up, from the business world, the president of El Salvador continuing to defend a highly criticized plan for his country to make Bitcoin legal tender.
Yeah, it's a pretty controversial plan, I think, to put it lightly. So Nayib Bukele, the president, talking about how the recently passed law will take effect on September 7th. That plan will require businesses to accept payment in the famously volatile cryptocurrency. He's justified the move by saying it'll help reduce transaction fees generated by the country's high reliance on remittances. Now addressing the nation, the president also said anybody who signs up for an e-wallet on a certain platform will receive $30 worth of Bitcoin on their account. Take a listen.
There has been a bit of a dirty campaign about this, that salaries will be paid or pensions will be paid in Bitcoins. This is not true. Both salaries and pensions will continue to be paid in dollars. We want to make it clear that the use of Bitcoin will be optional. No one will receive Bitcoins if they don't want it.
Not sure I would want currency so beholden to the tweets of Elon Musk personally, but
That's a fair point.
It's a gamble. Finally, British regulators opening a new investigation, Cole, looking into whether Amazon and Google are respecting consumer protection laws.
Yeah, in particular, they're looking at whether the firms are doing enough to detect fake and misleading reviews, something that ultimately harms consumers. Now, that includes cases in which, quote, the reviewer has received a payment or other incentive to write a positive review. The Competition and Markets Authority also says it's examining whether the two are doing enough to promptly remove fake reviews and penalize offending parties. The investigation could result in new commitments from the tech giant, or possibly court action. Now, Charlie, it should be said, the CMA in the UK hasn't yet decided whether or not Amazon and Google have broken the law.
Cole Stangler from the Business Desk. Now you're up to date on all the top business stories. And